Good morning. Welcome to Core Services and our Core Belief Series, Why It Matters. Today we're going to be this case study number 3, internal control failures, and today we're going to be discussing conflicts of interest. A little bit about Core Services before we get going. Core is focused on audits and reviews of condominiums and HOAs, mostly between Oregon and Washington. And between Doug and me, we have over 40 years of combined experience working with associations. We also offer advisory services to help the boards make more effective decisions, such as board meeting observations and also assisting with budgets and understanding reserve studies and reserve funding options. So today we're going to be discussing material weakness and internal control as it relates to a conflict of interest that we discovered during an audit. So a little bit of the background on this one. A management company hired an employee, and the employee was hired to take over management for the manager role for several associations. What he actually did was also owned a construction company, which becomes part of the conflict of interest. In this case, the manager had the authority to select vendors. There was no approved vendor list in place by the management company, nor was there ever an independent evaluation of vendors who were selected to ensure that they complied with various licensing laws. Obviously, we have a potential for a breakdown in the segregation of duties because the manager could select the vendors. Managers were actually able to set the scope of the projects, and ultimately, the managers could approve invoices and the work that was performed. And again, this was a smaller management company. They trusted their employees. But as you will see, and as common sense would dictate, when you invest too much control and authority in a single person, you run a risk that it will be misused. So what we discovered on audit was the first thing we did was look at the budget to actual expenditures, and the repairs stood out. It was almost double what they originally budgeted. So as part of our auditing steps, we asked to see the invoices. And what we discovered was there was a brand new contractor doing the work on the job. They wasn't there in the prior year, and at that point in time, it was just a brand new one. Had no idea how they really selected that one. So what we do is a step that Doug and I put in place is we go out to the LNI, Labor and Industries for Washington, and check on contractor status to make sure that they are in fact licensed, bonded, and insured to do the work that they're being hired to do. We have found this far too often where companies get picked to work in these associations, and lo and behold, they actually don't have all the appropriate documents in place to protect the association in the event of damage or future negligence claims. So when we've discovered this, we went back and started looking at it, and then this is where we discovered that the owner was actually the manager. And so we started digging a little bit deeper, and we discovered that no one at the management company actually validated the selection of a contractor. It was strictly up to the manager. And I'm not going to let the board off the hook. The board allowed the manager to select the contractor and never once questioned their credentials, whether they were in fact able to do this. They assumed, wrongly in this case, that the management company had the controls in place. So there was a breakdown all the way around. And in this particular case, we were concerned obviously over the fact that no license, bonding, or insurance, but also this management company charged by the hour, and this manager's at the same time that this manager was hired, the number of hours that were being charged as management services doubled from the prior year. And so we started looking at this, and when we were concerned over the fact that the manager double dipped, charged this time through the management company for working on the project, but also turned around and charged the exact same time for running his construction company. Unfortunately, the management company did not have detailed records of the time for that particular period to where we could go back and independently evaluate it. So it still remains a concern. Obviously, this for us points out the fact that this is a material weakness in the internal control. There is no verification of contractor status. So there's no approved vendor list. No one's gone out and vetted to make sure that we have copies of their workers' comp, that we have that we're an additional named insured on their insurance policies. The management company did not have a conflict of interest policy. There was no statement that said, by the way, as my employee, as my representative, you can own another business if you want. We don't mind, but you are not allowed to use your business on our clients' projects. Didn't exist. Again, you're right. Probably shouldn't have to be stated, but without having it stated, everyone gets to throw up their hands and say, "Oh, I didn't know." And then finally, what we had was that total breakdown in the segregation of duties. One person basically controlled the entire vendor process. That manager could select the vendor and ultimately approve their work for payment. There was no one else involved in that process. Once the manager approved the checks went electronic, boom, we're done. There needed to be an additional person in between there to ensure the documentation was in fact valid. So obviously, this forced us to do additional procedures. We couldn't, once it's discovered, we can't just say, okay, well, they addressed the problem or they acknowledged the problem, let's move on. We don't know whether these expenses actually exist or whether the documentation is just made up. So we actually had to go out and physically review some of the larger projects that were formed, only to discover that it did not look like the work was performed. So we then did things like requested the additional timesheets, which the management company couldn't identify and bring to our attention. But in the process, we also started digging into the other contractors that were used on this project, and we found a few others who did not have either an actual contractor's license or had an improper specialty certification, or didn't, said they had one, but in fact didn't have one. So again, these caused all sorts of problems. And then finally, what we have found when we were doing this is some of those vendors did not charge sales tax. So naturally, without having the sales tax being paid to the vendor, the association is on the hook for that amount of money. So why does it matter? Look, the reality is management is required to establish effective internal controls. That's their whole purpose, is to provide an independent professional management service to protect the association's money. So it does require managers to put in segregation of duties to ensure that there is a second set of eyes on work that's being performed. You do need to have a conflict of interest policy, and you need to police that policy. Once a year, sit your employees down and have an hour conversation over what is a conflict of interest. Okay, so it takes an hour out of your busy schedule, but you don't want to run into this problem as management. And then finally, make sure you have an approved vendor list, an AVL or an ASL. These are the only companies that can be used by the managers in the performance of their duties. Then vet those people, rate their work, make sure that their prices are reasonable, and don't be afraid to add and remove people from the list, but do it through a process. And the reality is, like I said, management companies are a trustee. They have taken responsibility for a third party's money, and they need to make sure they're looking out for waste, fraud, and abuse. Our audits of these condominium associations are not inherently designed to discover waste, fraud, and abuse. If we run into it, it's because it's egregious. It is a very big problem and needs to be addressed. You need to make sure that you put the procedures and policies in place that protect that money. And so that means don't be afraid to go in and challenge your manager on any one of their large expenditures and make them prove the fact that the work was done and the expense is legitimate. Hope that's been helpful. As always, you can find us on the web at core-acct.com. You're also more than welcome to contact me through Twitter, and you can also find Doug and me on LinkedIn. Thank you very much. Hope you have a great weekend. We look forward to talking to you soon.